A very warm welcome to Money9's Daily Market Dose, Corporate Central, where we get you the everyday pulse of the corporate world, from all the big headlines to what's happening and the fluctuations in the market. We get you all the highlights on this show. Let's find out what took place in the corporate world today. Lessors have made further applications to Directorate General of Civil Aviation to deregister an additional 13 aircraft of Go First. With these latest applications, the number of planes sought to be deregistered now stands at 36. Go First, which filed insolvency application, has a fleet of 54 Airbus aircrafts, and half of them have been grounded for months due to engine problems. Lessors are seeking repossession of their planes before a decision is made on Go First's insolvency application. Further, DGCA has now issued a show cause notice to Go First, questioning why the airline's license should not be cancelled. The DGCA has given Go First till May 24th to respond. It also asked the bankrupt airline to stop selling any more air tickets with immediate effect until further orders. It has also asked the airline to provide refunds to passengers. Some travel agents, associations and service providers are contemplating applying to the National Company Law Tribunal to seek pending dues. And the stock of Tata Steel, the country's largest steel producer, has fallen by about 13% in the last 1 year, and the company's problems and challenges don't seem to be ending, especially regarding the company's UK business. The company has issued a warning of uncertainty regarding the continuation of UK business. The two main reasons for this are the bad market, and the other is the UK government's support. In July last year, the company announced that it would take a decision on whether to continue the UK business in the next 12 months. The biggest uncertainty in the UK business is government support, because the company has to shift its steel production process from natural gas and coal to electricity so that carbon emissions can be reduced. But according to a report, the company will get £300 million from the government, whereas decarbonizing the Port Talbot plant alone would cost up to £3 billion, and the company has sought £1.5 billion from the UK government. The decision on the government support is important because Tata's lifespan of blast furnaces is coming to an end in the next 12 to 24 months, and it takes 4 to 5 years at least to make electric furnaces. In the March quarter, Tata Steel's consolidated profit fell by about 84%, and the profit of the European business was down by more than 60%. The National Company Law Tribunal on Monday issued a notice to SpiceJet on a petition filed by Air Castle. The aircraft lessor is seeking initiation of insolvency resolution proceedings against the budget carrier. A two-member principal bench of the NCLT issued notice to SpiceJet, and the matter would be heard on May 17th. The latest development also comes at a time when crisis-hit rival Go First has filed for voluntary insolvency resolution proceedings. Air Castle has filed the petition against SpiceJet on April 28th. Last week, SpiceJet said that there was no aircraft from Air Castle in the airline's fleet, and the petition will no way affect its operations. According to NCLT website, 2 more petitions for insolvency resolution proceedings against SpiceJet are pending before it. The plea by Willis Lease Finance Corporation was filed on April 12th, and the one by Acres Buildwell Private Limited was filed on February 4th. Nestle is competing with companies including Tata Consumer Products and the Kraft Heinz to buy Capital Foods, which makes food products and ingredients under the Ching's Secret and Smith & Jones brands. Investment bank Goldman Sachs is valuing the company, which saw $55 million worth of sales last year, at between $500 million and $800 million. ITC is another potential contender that is also being considered by the sellers and their advisors from the initial screening list of potential candidates. Nestle is working on an all-cash offer, while some of the others like Kraft have suggested acquiring of up to 75% of the company and taking it public. Any transaction would likely value Nestle at more than $1 billion, according to the people. The Anil Ambani promoted Reliance Infrastructure's Delhi Airport Metro Express on Monday filed a contempt petition in the Delhi High Court against the centre, the Delhi government and Delhi Metro Rail Corporation for willful and deliberate disobedience of the court's order directing the payment of 4,700 crore rupees arbitration award the company had won. Justice Manmeet Preetham Singh Arora transferred the case to Justice Yashwant Verma, who has already seized off the matter, including the enforcement petition related to the arbitral award. The matter will be now taken up for hearing on August 18th. Invesco, an existing investor in Swiggy, has slashed the food delivery firm's valuation by 33% to $5.5 billion from $8.2 billion as per regulatory filings made by the US asset manager. This is the second time Invesco has cut its valuation in the food delivery firm. Earlier in October last year, Invesco had reduced the valuation from $10.7 billion to about $8 billion, a cut of around 33%. This time, the investment company has slashed the valuation to about $5.5 billion. In January last year, Swiggy raised $700 billion in new funding led by Invesco, which made the food delivery platform a decacorn as its valuation crossed $10.7 billion. The new valuation is 49% lower than the $10.7 billion valuation. This development comes amidst reports of the food delivery giant taking measures to cut costs, dispose of the non-viable business verticals and aim for profitability. The company is reportedly undertaking these activities to make a debut on the stock market soon. Swiggy's rival company, Zomato, which was listed in the tech boom of 2021, has its price fallen by about 50% compared to 2 years ago, due to which Invesco took this decision for Swiggy as well. Bengaluru-based QMAT, a maths-focused edtech startup, has fired about 100 employees, citing a conservative capital market and technology changes. This translates to about 12.5% of its 800-strong workforce. The cuts were carried out across departments, and founder Manan Kurma, in a LinkedIn post, said that the firings were done as part of a rationalization of roles to reflect QMAT's increased focus on learning and consumer experience and retention. Meanwhile, the founder Manan Kurma has also returned as the company's full-time chief executive officer, and the company's current CEO Vivek Sundar is being shifted to an advisory role. And that was all about corporates. Over to some market stocks that were in action today and also analyze the reason behind it. First up, pharma company Mankind Pharma entered the stock market with a big bang against the issue price of 1,080 rupees. The share of Mankind Pharma on BSE opened at 1,300 rupees. That is at a premium of 20%, and about an hour after the listing, the stock touched an all-time high of 1,413.95 rupees. There are two major reasons behind the strong listing. First, there was a tremendous response from the institutional investors to this IPO, which was subscribed 15.3 times in total. But the share of QIB, that is institutional investors, was subscribed more than 49 times, while the quota of retail investors was subscribed not even once. The second major reason for strong listing is the bullish report issued by Macquarie before the listing. Macquarie has initiated coverage on the stock with an outperform rating and a target price of 1,400 rupees, which was achieved within an hour of listing. Macquarie said in its report that by December 2022, this company had a cash of 280 crore rupees. Also, this company has a focus on medicines related to chronic, that is permanent diseases, which will further improve the margin along with growth in business. On the day of listing, that is on May 9, the stock closed with a gain of 32.4%. And shares of gas distribution companies like IGL, MGL, Gujarat Gas have seen a rise of 3 to 10% on Tuesday on May 9th. And the reason is the fourth quarter results of MGL released after the market closed on Monday evening, which have been excellent. The biggest highlight of the results was the margin, which increased from 15.3% to 24.2%, whereas the estimate was just about 16%. In addition to this, the company's profit from 172.1 crore rupees increased by 56.2% to 268.8 crore rupees, whereas the expectation was that profit would remain flat around 170 crore rupees, even though the company's income declined by 3.6% from 1,671.4 crore rupees to 1,610.5 crore rupees. The working profit has increased by 52.2% from 256.1 crore rupees to 389.7 crore rupees. Apart from this, the company has also announced a dividend of 16 rupees per share. Shares of Apar Industries took a huge plunge of 18% on May 9th. The reason behind this decline being the profit booking, which has dominated after the tremendous rally in the stock after the fourth quarter results. If we talk about the speed in the stock, in 6 months, this stock has registered a gain of about 90%, and in 1 year, it has registered a gain of 318%, that is more than 4 times. Quarter 4 profit increased by 194% from 82.6 crore rupees to 242.7 crore rupees. Income grew by 35.4% from 3,003.9 crore rupees to 4,056.5 crore rupees. Apar Industries is the world's largest conductor producer and the third largest manufacturer of transformer oil. And not only this, it also manufactures renewable cables and also is the world's largest manufacturer to do so. With strong volume growth in all 3 segments as well as cables and conductors, and due to good growth in the business, the results have been seen strong. The company's order book in the conductor segment by end of March 2023 is 5,124 crore rupees, and on the back of the strong results, the stock touched a record high of 3,296.4 rupees on BSE on Monday, but on Tuesday it closed with 15% loss at 2,601 rupees. Well, that's all on Corporate Central today, but before we get going over to some important market events and triggers which could have a potential to impact the market, let's take a look. First up, we have some results coming in, results of L&T and Dr. Reddy's, also Godrej Consumer, Bosch, Gujarat Gas, Escort Kubota will be out, and also Relaxo Footwears, BASF India. JBM Auto results will also be released on May 10th. And a stray case to come up in the Kolkata bench of NCLT on May 10th. Also, Fusion Micro's 6-month anchor lock-in will end on May 10th. Followed by Coforge and Laurus Labs will trade ex-dividend on Wednesday, which is May 10th again. And record date of Welspun India's buyback falls on May 10th. Buyback of 1.62 crore shares is at around 120 rupees per share. And with Karnataka running up to assembly elections, watch out as 10th May being the voting day in the state could impact the market scenario. Also on May 10th, Cabinet and the CCEA are expected to meet, so watch out for that as well. And on the global front, United States April CPI inflation data is to be released on May 10th. That was all on Corporate Central today. Keep an eye on all the corporate updates as we'll be back with more new updates tomorrow. Until then, stay tuned to Money9.